Welcome to Stephen Johnson's Stocks, and I've been thinking about how I can phrase this, and the only way I can think about it is by saying I've got some catastrophic flaws in me personality and psychology, and I've got some catastrophic flaws in me trading. And while I did have a good 7 green months on the back end of last year, there was some catastrophic flaws in me personality and in me trading, and I was getting away with a lot of stuff, and whether it was just the market was letting me get away with it in terms of the pattern that I was trading was really working then, or if I was just going on some raids. And fortunately for me, the raids that I was going on when I was going down 500, 1,000, they were coming back down. More recently, in the last 3 months, I've had 3 straight red months, including this one, sadly. I haven't been getting away with them, so I've really had to address a lot of things, and one is putting discipline back in my life. You'll notice that I'm a lot thinner and healthier now because I'm really focusing on things a lot more. The second thing I really need to do is more fully immerse myself in the market and trade a lot less, which I need to do. But the third thing is, it's kind of like really, it's great to have the 2 and 3 grand months, but it's more important to just have the right process and cut the high day breaks. And this episode is all about the importance of cutting a high of day break. Let's go into it. But that's having I had a 4 grand red month in June. I had a 3 grand red month in July or something, and then in August I had a couple of grand red month. And this month is a lot less. So I am turning, I am addressing flaws, and I really think that despite it taking a couple of years, it's definitely going in the right direction, not the wrong direction. You might think it's going in the wrong direction, but a lot of flaws were hidden and they've been exposed. And if you've had 3 green months and you're running and you think you're doing great, you'll probably come to find that there's holes in your strategy and they will be exposed at some point. Yeah, I'm a little bit embarrassed to show you this, but started off back trading, good intentions, trading well, trading professionally, really taking appropriate size and appropriate risk. Had a couple of nice little days, and then small red days, nothing. And then on this day, there was a real what I'd call a 5-star setup. So I went for it with appropriate position sizing and nailed it. And then I got cocky and was just messing around, shorting higher price stocks, fucked up. Had a bit of a bad. Then this day I didn't really do too much wrong. It was just it's one of those days. So I took a couple of trades that didn't work out. Came back all right, but then through frustration of the market being quiet, I just went bigger size than I should on a random stock without following any plan, without following any strategy, without doing what I normally do. And then this led into going too big size the next day to try and make the month better. And I ended up being down $876. Turning what was 11, 12, I was up $100 on this day before I did the stupid thing, turning a $1,300 profit month into a minus 876 red month, simply from just absolutely losing discipline, absolutely trying to force stuff, absolutely not running the way the market runs. And I mean, it sucks, but the only thing I can really think is I was losing 3 and 4 grand a month and going completely out of control, taking 4 grand losses and 2 grand losses. This is when I really blew up. And these days look like really good days, but those days where I was going minus 1,500 down and I was getting away with it and coming to 200, 300. So what I really need to do is just maybe have a lot of little red days. It's okay, but then when the big green day comes, then it all kind of works out. Have a lot of little green days, a lot of little red days, but just really protecting the account and getting rid of these catastrophic days. This is SPHS, and it's a biotech, but it's not your typical biotech. I mean, going back 2 years, it was in the 350s. Just a few months back, it was in the 380s. Had some bad news, obviously, which kind of cut its stock price back down to the 2s where it's been sitting, but now it looks like it's pushing back to the 350s. It almost looks like it's a gap fill. It does have a tendency on running multiple days. And so it's a mixture, and it doesn't really have many kind of gap ups and fails. It's certainly not a bad chart. So when you combine this, I was short on the first green day, which I normally do, in all honesty. Short this day here. expecting it to come down because it's had some bad news recently. In the news out was that a patient didn't actually die in the study, but I think if this news was that the patient might have died because of the drug that they produce, and then they found out that it's not because of the drug, it actually might rise back to the 360s. So I mean, and not a bad chart combined with quite strong price action pre-market. It was really holding its highs, its very highs. Can suggest that it's probably a good week open red to green. I was a bit too aggressive on it. Let's take a look at the live action. Okay, so I've built in $8,000 position, 2,700 shares pre-market. Sped up a little bit here. You can see I'm putting a few orders in for the spike, and I mean, I'm not dead against this, but it is very risky because the stocks are kind of, my average is about 308, 307. You can say they're 306.4, so nearly 307. So I'm flat at 307. And I don't mind shorting a little spike because often, although it is bullish and bearish, I mean, to be honest, I shouldn't really be in this in the first place, but if I'm got a gun to me head and I have to trade it, then I don't mind shorting into a spike because often you'll get a spike and a pullback, which is what you can see here. You've got this wick. I don't mind adding into the wick because it's not a super bullish stock. It's not super bullish news, so it's not like it's going to run higher and higher and higher. So it's going to take some time to get up there. So you can kind of short that spike, expecting that it's not going to go to the 4 straight away. And then I take a little bit off there. We'll slow down a little bit. But the problem is, and you see I've marked the support and resistance line that's out there, and it bounces perfectly off them. But the point is, and this is where I went wrong on the trade, and I think we're slowing down a bit here. This is neither a really strong setup or a really weak setup. It's not really bullish or really bearish. So whether you might get the wash, you can't, I mean, if it does come all the way back down to the 250s, I mean, that's a surprise. But if it goes to the 350s, 360s, 370s, that's also a surprise. So my risk to reward here is not really that good. I mean, I'm short from 307. If it goes to the 350s, I'll lose 500. If it goes to the 3s, I'll make 500. But the stock isn't fundamentally weak enough to fail. And this is the problem. I'm like, if I'm lucky, because like I said, the news isn't great. It's not terrible. The chart isn't great. It's not terrible. The volume's quite good. It's not got any warrants out. There's no reason for the stock to collapse. But if I'm going to play it to my true risk reward, like I can't take a trade to risk 500, lose 500. That's a gamble. So I've got to wait and see if this comes down to the 270s, 260s, and then it's a good trade. But it's not a good trade, but I've at least captured 2 to 1, 3 to 1 risk reward. So I'm waiting. I'm up 400 and I'm waiting. Now I'm up 150. Now what's going to happen is it's not really a super strong chart long term, but it's okay. And pre-market it has been super strong, and when it's bounced off that support and it's starting to make higher lows, I'm just taking a little ad there, thinking it will come back down, thinking it'll double top here. But the reality is, if it breaks 312, I should be out. I should be averaging out. I should be averaging down here, taking a few profits, and then when it breaks 312, I should be out, cutting the high of the day, because it's proven to me that it's got the capability, and not that it won't break down, but it's actually retesting the high of day here. I could have been out for a $90 loss with it, even though I was in too big. This is an absolute cut. I should have absolutely cut for $223 loss here. I should have been scaling out and then out. Again, could have been out for $150 here. It's not happening that fast. It's not rapidly moving up and down like a penny stock. When you see it sitting on here, when you see it not breaking down, when you see it resting on the pre-market highs, there's a number of bullish indicators. 1, it was super strong pre-market. 2, we've sold 1 million volume in the first 15 minutes. 3, it didn't break down at that key support level. 4, it's holding high of day. It's not slamming back down, it's holding. 5, on the 5-minute chart, we can see it's green candle after green candle. These are all terrible signs to get out. I don't get out, I'll be stubborn, and boom, I'm down 500 straight away. And then after that, all you can do is just hope that it fails, but then you're at the mercy of the stock. And what do? I get stubborn. I could have been out for 300 there. Could have been getting out in the dips, could have took a $400 loss, but I'm like, no, I'm stubborn. And this chart is bullish as fuck. And I'm just holding stubborn here. Could have been out for 188 there, but I'm like, no, let's hope it goes down. Let's hope it goes down. Let's hope it fails. Every kind of indicator is pretty bullish, yeah, on the intraday chart. And like I say, the long-term chart's not bullish or bearish. It's equal. So I shouldn't be in it for that state. We get the double bottom and it holds support. And again, I should be out in the 320s. I'm stubborn. I'm hoping. I'm just fingers crossed praying it breaks down. Looking at fives, it's confirming it's extremely bullish. It's made a move. It's held the move. No one's selling. That low volume 5 candle shows that nobody is selling. I should be getting out like a fucking hot potato cake. Now, in the end, what happens, I'm not sure how far this will run for, but this runs to the point where I'm like $1,500, $1,600 down, and I'm lucky to get out on a dip and just lose 1,000. But the point is, this could have been a $1,500, $2,000, $2,500, $3,000 loss had I just stayed in. And at some point, if I had stayed in, I could have been panicking out at the top at a $3,000 loss. And I'm lucky to get away with a $1,000 loss. And there's the next rip. I'm down $1,000. And at some point, I think I stopped the recording because I'm just like, fuck this. And like I say, I got out for $1,000 because it does go much further. I would have been down $2,000 or $3,000 if I'd stayed in. But luckily for me, I found a good dip to get out on. But the point is, you've got to cut that before the pre-market high breaks or the higher day breaks, or you've got to cut on the higher break.
I hope you like the live.
And that's a wrap. I hope you like the live trade. I mean, you can immediately see the problems in my strategy are, one, going a bit too big pre-market. And even that wasn't too bad, but because, the setup wasn't an A-grade setup, so I shouldn't have been going that size. But even if you did go that size, and just cutting the higher day was so important because I could have just lost 300 instead of 1,000, and I would have been flat month. But hope you liked it, and I just want to say to you guys as well, I was talking on the podcast, and I was talking to Roland on an interview for Steady Trade, and something really dawned on me, and it's that for me, trading is very much me against me, and maybe my personality is a bit fucked up, so I'm having to work a bit harder to deal with the ego that comes, dealing with the confidence that comes, dealing with my up and downness that comes, trying to manage it. But the actual, and because I read comments where people are like, oh, he's been in the challenge for 2 years, or he's been in Stocks Trade Pro for 2 years, how isn't he fucking learning? And it's like, it's not really that. It's like, you only need to do a year in the challenge or a year in pro, and you get a good basis of the theory. Like, I had my strategy down pretty much at the end of that year in the challenge. And the rest of the time is me just working out my own nuances, because I don't trade anything like Sykes, I don't trade anything like Rotani, I don't really trade like Docs. I've got my own strategy and it works. I'm just fixing the technicalities and fixing my discipline, and this might take 2 or 3 years. But the point is, you only need to do a year on the challenge to learn the theory,